Okay, I record this video Saturday 30th of November 2013, Thanksgiving weekend. If you celebrated Thanksgiving, hope you had a good time. It's been really nice to have a few days off. This week was extremely quiet, and so was part of last week as well. Hardly traded at all. In some ways I'm kind of looking forward to a little bit of range and volume returning next week, but just been taking advantage of a few days off. And so this weekend I'm trying to think about the big picture. We're obviously turning a little bit exponential in terms of this equities market, and we're going to get some kind of blow-off end to this move at some point. But I'm trying to think, is there anything else I should be looking at for signals and clues that things are going to kind of turn around? And I'll just show you what I've been looking at in my charts in terms of currencies and markets, and try and give you the kind of short answer from my perspective at least. Just as a little recap though, this week we ended with rainbow patterns on all three time frames. You can see on the daily chart, the weekly chart here with a flush pattern, and it's the end of the month for November, and we've got a rainbow pattern up here. Rainbow patterns just show that there's lack of demand up here. You can see on the weekly chart we get them before we start to roll over. There's one just hiding behind this end of trend signal here. Got another one here. Not necessarily saying that it's going to roll over next week, but you know, these look like they travel a little bit for a week or two, but they definitely just lose steam with rainbow patterns kind of going on there. And this move, this equity move, is not going to be over until we start to see end of trends print. You know, we're in this big move from the beginning of the year, kind of December, January. This thing broke into an uptrend on the weekly chart. We've got to see pullback to end of trend on the weekly chart before the thing kind of rolls over on a big picture. So I'm not thinking about that. I'm just thinking about, is there something that's, you know, giving us early warnings that things might be kind of turning around? And the way I'm thinking about this is looking at the market in terms of, you know, where the money's flowing from a currency perspective, which countries is the money kind of flowing to, and then from a market's perspective where the money is kind of flowing. So it'll flow out of equities, but where will it kind of go? The short answer in terms of currencies is I don't think currencies are going to help. Because they're not going to signal before the trend actually happens. Let me illustrate that with the dollar index here. So what I've marked is September 2000 and October 2007, which were the last kind of major turning points on the equities market. You can see with both of these, during those turning points on the equities market, the currency just kind of kept on going in the trend it was traveling in before reversing. So we had the dollar index that was strengthening. It had been ever since the tech boom basically took off in the US, and that money took a long time to kind of turn around and realize that actually, you know, the tech boom was over and we were going into a tech wreck. And so that turning point happened a lot later, and it's kind of really not until 2002 where the market kind of turned over in the dollar index. Now after 2000, what was happening? We were printing dollars, like, you know, the Fed were had basically lowered rates so low that they were debasing the currency, and that's what happened to the dollar index. It got kind of destroyed. And even though this turning point in the equities market happened at this point here, you know, that view that the dollar was still kind of going down kept on, persisted for almost another year after that kind of turning point kind of came in, and that's when the Fed got really ambitious with what they were doing, and they said, no, you know, we're going to turn this thing around. So dollar index is not going to help just because we travel through these turning points. You know, the trend continues in the currencies at this point, and so I don't think currencies are going to give us any kind of indication. Just rolling through the other charts here. Here's the euro. The euro, you know, had just kind of started trading really. So, but again, through these turning points, you can see the trend continued on the way down and on the way up on the euro. For the British pound, same thing. The trend was continuing through that turning point. Kind of happened turn to turn at that point on the pound, but that was a little bit of an anomaly. You know, the other currencies weren't doing that. Aussie dollar, through here the trend continued through the turning point and through this turning point as well. Canadian dollar, actually the Canadian dollar, we had one good turning point here, but the trend kind of continued here. I flipped this looks a little bit different. I've just put an inverse indicator here just to show this is actually the Canadian dollar kind of moving through these ranges here. Did the same thing with the Japanese yen because, you this long history in the Japanese yen is flipped the other way around. It shows the US dollar versus the Japanese yen, and this is an inverse indicator. And again, through this turning point, you can see the trend kind of continued, and this one through that turning point, the trend continued. So the point of this is to show that I don't think the currencies will show us the turning points in advance. The currencies will turn around after we kind of have the turn in the equities market. So that's the short answer in terms of currencies. However, on the markets picture, though, I do think we're going to get a little bit of an early warning signal as to what's going on. So let me show you. First of all, this is the S&P 500 index here. And you can see these are the turning points that I've chosen. This is the September 2000 turning point, and then the October 2007 turning point here. So that was what was happening in equities. We kind of maxed out at those points, and then that's when the downturn really started to happen. And I think there's different stories kind of happening in the other markets. Let me deal with crude first of all. In 2000, what was going on, the crude market turned down. The crude market had been strong into that because crude was viewed at that point as something that strengthened with global growth. So as we had global growth, the price of oil was expected to increase. And then when the 2000 peak hit, we saw that would mean a hit in global growth, and so crude oil actually went down. By contrast, by the time 2007 rolled around, crude is now viewed as a valuable asset that in and of itself kind of has tangible value and is a store of wealth. So crude is almost being used through this period here as a store of wealth, and you can see the money flowed into crude at this point and kind of continued flowing, rising in terms of price through that equities turning point. So it would seem almost as a safe haven play, as somewhere where it was a store of wealth, quite like gold was doing during that period here. But there's a difference. In 2000, this was viewed as a harbinger of global growth, and so it turned down because global growth would slow with a slowdown in the equities market. But at this point here, this is kind of a hard asset, and money flows into it because in advance, because people are wanting to preserve wealth. Same story with copper. So copper at this point in 2000 was viewed as, as this, we had a strong global economy, we would have strong copper prices. But as soon as the turn down in 2000 happened, we had weak copper prices because there was going to be less global growth. So the copper price had been strengthening through 2000, then it kind of fell off after the peak in the equities market. But through the 07 turning point, you can see it had been pretty strong kind of leading into there and continued to be strong after a little bit of kind of volatility during that month or two there. So that was viewed more like crude as a store of wealth. Gold, a different story. So gold had been weakening into this turning point here. Gold only turned afterwards when we saw what the Fed was doing, kind of debasing the US dollar. So gold kind of turned after that. But coming into the second turning point in 07, again, gold was viewed as a store of wealth and had already started to strengthen coming into that turning point in equities. Silver is going to be a very similar picture to gold. You can see it was weakening through 2000, but as soon as after 2000 kind of comes along, we've seen what the Fed will do. Silver is viewed as a store of wealth. It started to strengthen prior to that turn in the equities market, and so that was viewed as a store of wealth. So these three markets, so the commodities markets and then the precious metals markets, in the last turning point, because we now know what the central banks will do, we had those markets starting to strengthen prior to the turn in the equities market because it was viewed as somewhere where you could store your money, and it would kind of continue to hold its value or appreciate in value while the equities and the valuations kind of went down. Bonds, slightly different. So through the two turning points in bonds, we had strength at both periods. Several months prior to the equities markets kind of topping out, we had bonds starting to rally. You can see them here and here 3 or 4 months kind of prior in this case, 5 or 6 months prior in this case, the bond market had started to strengthen. So the smart money, having flown out, money was flowing out of bonds and into equities at this point and this point here. The smart money starts to say, no, I'll take my profit in equities, I'll get out at these kind of highs, I'll move money into bonds, and the bonds market started to rally. So from my perspective, the bond market is really kind of critical in terms of signaling early that there's going to be a turn in the equities market. We need to see the bond market signal that money's flowing out of equities and into bonds. We'll get a kind of clear signal from there. And then if we still assume that the central banks are going to do what they kind of did, then that we're going to see, the other hard assets, if you like, the commodity markets, the precious metal markets, starting to strengthen as well. But the real key will be the bond market. So the question is, what's happening to the bond market right now? We know the equities market is really going a little bit exponential. Are we starting to see a real bottom form in the bond market that we're going to rally from? Now, this is the daily and the weekly chart kind of setup here that I've kind of reviewed over the last several weeks, and I don't think it's clear that the bond market is really starting to rally here. We've got this pattern over the last 3 or 4 weeks with these big kind of blue professional bars, and we're still stuck within these ranges. This last big down bar that we had, we bounced back into that blue professional bars range, and then we had another blue professional bar that fell out of bed, fell to new lows here. We've kind of bounced from there with blue professional bars sitting again within the range of the kind of highs and lows of those blue professional bars, and we've got this exhaustion pattern kind of going on the daily chart. For me, that's still inconclusive. We're still stuck between this range up here at 133, down here at 129 in terms of bonds. We're going to have to do a lot more kind of testing and pushing back down in order to figure out that this is a low being formed. At the moment, what this could be is just a little bit of a short covering rally with this excessive exhaustion volume signal going on here. We've certainly not seen any blue professional bars kind of pick it up here. We've got a cyclical turning point on the weekly chart that potentially is going to come in, but it's certainly very early in terms of what the bond market is doing. It needs to kind of hold in this range and break above 133 before we start to see kind of real strength in bonds. In my mind, we've still got to do some work on the downside in order to prove that this thing is actually, that the professionals were picking up these lows up here. We bounced from them, no doubt, but it's not weak little kind of pushes down, testing down to the lows in order to signal that they're just pressing into there, making sure 130 is it and kind of going away. So it's not conclusive on the 30-year from my perspective as to what's going on, and we got this turning point on the weekly chart to kind of come in. If we look at the 10-year, similar type picture. We've got these big blue professional bars. We're holding a little bit, but we're still within the ranges of those blue professional bars. So it's a little bit of a kind of a congestion pattern here. We've had this exhaustion pattern similar to the 30-year. That one's better placed in terms of showing this was a bit of a short covering rally kind of going on here. We're really at risk of kind of rolling over. We've had amateur weekly bars kind of up. We've seen no blue professional bars kind of pick it up at the lows, and we could easily, if we drop through this support level, drop into another downtrend. We've got cyclical resistance in here, so just waiting this week to kind of get confirmation and just see where this is going in terms of this ranges with the highs to lows, whether we're seeing this as a good place, the professionals seeing this as a good place to kind of pick it up, or is it just a profit taking and it's going to continue on the way down. And on the 5-year chart, the 5-year notes, here's similar thing. You can see these big blue professional bar here, and we're stuck within this range. Going to make pullback to end of trend at some point here. It's a blue professional bar on the weekly chart underneath resistance kind of going on here. So let's wait and see. If it does break above this high, this blue professional bar, it's stronger. The shorter time frames, the shorter dated bonds and notes are definitely stronger than the 30-year. The 5 and the 10 are stronger than 30. But let's kind of wait and see. I'm not sure this bottom is in necessarily, but it's what happens with this blue professional bar that's going to be absolutely key. If we break this on the upside, then that's definitely kind of strength in bonds. It's held for the time being, but it could easily just kind of roll over as these weekly resistance levels kind of start to print. Let's see if the low of this week's activity gets kind of broken in this next week. We put in an end of trend, we kind of break down through 120, then we're back down on the downside here. So it's inconclusive yet in terms of the bonds market, but that would be the key to look at this kind of going forward. If the money is really starting to flow into bonds, it's flowing out of equities kind of early, they're taking profits at these highs, and we'll start to see the bond market kind of strengthen before the equities market starts to roll over. And as I keep on saying, I'd really like to see a pullback to end of trend on the weekly chart here before the equity side is all kind of done and over. So that's what I'm looking for in my kind of charts and kind of the big picture, and kind of wait and see anxiously this week and see if we get a pick up in volume and ranges and kind of get back to some decent day trading. Anyway, hope your trading's going well.